And welcome once again to Flashpoints. I'm Bob Orr. Joining me, as he always does, is Juan Zarate. He's our national security analyst. Juan, as always, good to see you.
Bob, an honor to be with you.
So let's talk a little bit about Russia. If you've taken a look at the financial pages, you know that Russia's got a big problem here. The ruble collapsed. The bank overnight jacked up interest rates. What's going on here?
A major crisis for the Russian economy. I think we just have seen the beginnings of it. The ruble has been devalued by half over the past year. The numbers fluctuate, but the ruble is in real trouble. The central bank's been trying to stabilize it. The price of oil, Russian economy is very much dependent on its oil exports. They budget for about $100 per barrel for their state budget. The numbers look like they're going to be sustained at about $60 a barrel.
If that.
If that, right?
Yeah.
And even perhaps below. And so that means a real potential deficit in terms of the state's ability to pay its bills. You have a mismanaged government, for all intents and purposes, that was already slowing into this year that now looks like it's going into recession. And on top of that, you've had the Western sanctions, which, though they may not have affected what's happened in Crimea, has really put the pinch on investment and capital moving into Russia, creating lots of market uncertainty and a lot of capital flight. And
well,
so
let me ask you about
combination of factors are very bad for Russia.
Let me ask you about that. What impact have the sanctions had in terms of what's happening to the economy right now? Because this is a serious dent.
Right. The sanctions have been both a catalyst and an accelerant to these fundamental factors that have been at play in the Russian economy anyway. The Russian economy was already slowing. There was already mismanagement. The price of oil was already being affected by the increase in supply to the U.S., the dampening demand in China and in the world economy. So those factors were already happening. Those were already going to hurt the Russian economy. What the sanctions did was to throw uncertainty into the market, because the most effective part of the sanctions have been not the individuals who've been named and shamed and the visa bans, that kind of thing. It's really been the restrictions on capital investment, saying to Western banks, you cannot provide long-term financing and then later financing beyond 30 days to any Russian entity or actor or investment, and restrictions on long-term technical supplies in the oil exploration context. That did damage to the sense of stability in the Russian market and really started to freeze capital in Russia and in and out of Russia.
Quickly, what effect do you think this has on Putin's hold on power there and his bond he has with his people? Because the deal basically has been, let me run things and things are going to be fine.
Right. Well, the state is trying to do everything possible to stabilize the situation. So the central bank, you saw, increase the interest rates. They sold off gobs of dollars today to try to stabilize the ruble. It seems to have worked, at least for now. The problem is Putin is incredibly popular from a nationalist standpoint. You look at his numbers, you're at 70, even 80% approval. The challenge is this sustainable? What happens as the economy really does go into recession, as the Russians begin to feel the effects of inflation and buying power? And really then, does he feel like a cornered badger? And does he begin to strike out in more aggressive ways in the Ukraine? Or does this chasten him and create fractures within his supporting oligarchic elite, whose bottom line is being affected by what is, in essence, mismanagement on the economic side and geopolitically?
Juan, thanks as always.
Thank you, Bob.
And thanks to you for watching Flashpoints. I'm Bob Orr. We'll see you next time.